Financial Survival Network, helping you survive and thrive in the new economy. Go to KerryLutz.com and sign up for 30 free micro trainings on financial survival.
1490 WGCH. This is Kerry Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold and silver for over 20 years, and I'm a customer because when you buy, they ship. For more information, find them on the web at milesfranklin.com or give them a call at 800-822-8080 and get a free quote. Just when you thought it was safe to sell your gold and get the most money you were ever going to get, Friday hits. And what do we see on Friday? Gold goes up over $66 an ounce, silver up nearly $1. And since we've done so many crash reports and panic reports with our old friend Andy Hoffman, it's time for a rally report from milesfranklin.com. Hey, Andy, you must be feeling good today. Mets no-hitter and gold gets a grand slam.
Well, I'm very happy about the Mets, but I can't say I'm quote happy about what's going on in gold, because what it means is that the end game is starting, and when the end game finishes, people won't recognize the world for what it is. I'm happy to be protected, and that anyone who listens to us is protected. But protection is going to be a lot more than just owning coins when the social structure starts to break down.
Hey, well, you know what they say. There's a lot of people walking around today whose parents thought they were protected too, and here are the kids, right?
Yeah.
So we saw it go up. We saw a nice run that the boys couldn't stop. Now it's Monday. It's what is it? June 4th, right? June 4th. And
correct.
Yeah, it's June 4th, and they're back to the same old tricks, and they're just going to keep doing it until those tricks no longer work, right?
Yeah, I mean, I wrote this weekend about that they'd have every trick in the book, starting with the Sunday night sentiment. If you watch Sunday night in a normal market, it would have opened up huge, and it opened down $10 in minutes, and then at 2:15 when the London market opens, it got hit. At 7:00 when the U.S. market opens, it got hit, and then at the COMEX at 8:20 it got hit, and just now $8 or $9 at exactly 12:00, which I call the cap of last resort. I mean, it's just the same old stuff. The fact is, though, that, if you're sitting here owning coins, you're up 3 or 4% for the year. And the Dow, the propaganda average, which they spend so much time propping, is now down over a couple of percent. And the bank stocks are really, really in free fall. And I have a couple of names that I'm watching because I know that they're linchpins of the system. One is Crédit Agricole in France, they're the largest, believe it or not, they're the second largest retail bank in all of Europe. Number one is Santander of Spain. And over here, we're seeing what I call the trifecta of terror or whatever. Citigroup and Morgan Stanley and Goldman Sachs all about to break through their fall lows, and particularly Morgan Stanley, which I believe has major, major derivatives and French exposure and could be in major trouble in very short term.
Yeah, and their debt is trading at junk levels now. It's funny. I had a friend, Harvey Houtkin. He literally invented day trading back after the crash of '87. He figured out how to manipulate the whole SOS system, and he used to call them MGM. Back in the good old days, he said the markets are totally controlled by MGM. We're all getting ripped off, and MGM was Morgan, Goldman, and Merrill. He called them MGM. And now, of course, Merrill's part of BOA, and I don't know about the other ones, but basically that's the way the market works, right?
And have you seen the if you call it news that came out that, yes, the Bank of America executives definitively knew that they were taking on a pile of crap because it was handed to them by the government. And it's now fact that they knew what they were getting into, and they still sold it, and the stock collapsed. And this is just more of the same. Well, it was a bailout under any other name.
They didn't have a choice. I think the Hank Paulson said to the head of BOA, that guy Lewis, I think was his name at the time.
Ken Lewis.
He said, Ken, congratulations. You are now the proud owner of one of the most esteemed and storied stockbrokers on Wall Street. Here are the keys to Merrill Lynch, and you know what? Good luck with it. No,
and Countrywide Credit on top of that.
Yeah, Countrywide Credit, and they basically they're following orders because it's like I've been saying. There is no Wall Street. There is no banking sector. It's just like a Hollywood set where it looks like you're in Manhattan, and then when you look behind the edifice, behind the facade, you see that it's nothing there. There's nothing there. And when you look behind the show set of BOA, of Goldman, of any of them, you see the White House. You see the government, the Treasury, because they're just different flavors, different brands, different websites of the U.S. Treasury, right?
And in true communist form, the government picks the winners and losers. The government did not like the people or philosophy of Lehman Brothers. They did not like the people or philosophy of Bear Stearns, and they didn't bail them out. And the same, I believe, is going to be the case for Morgan Stanley. To me, Morgan Stanley has always just been a copycat wannabe. They keep that name Morgan as if so people believe that they're part of JP Morgan. They have nothing to do with JP Morgan. They're just a wannabe. They want to be considered Goldman Sachs and JP Morgan. They're much smaller. They've gotten themselves into a much bigger mess because they allowed the government to make them the steward of their interest rate derivative swaps. And also, somehow, their principals have decided that France was a great place to invest. France, of course, is the leading investor in bonds of Greece, Italy, and Spain. So I believe that Morgan Stanley is going to be left out in the cold, consolidated into someone bigger because they are not part of the system anymore.
Yeah, so are they too big to fail? I guess they're too big to fail in the sense that they're derivative exposure is way higher than Lehman's ever was, and you can't have that counterparty disappear at this particular point from all the derivative trades, because then you would see the whole thing just implode.
My view along about both Morgan Stanley and Goldman Sachs, the problem with them is that, yes, they are important. Like Goldman is important because it's got all these people in government. And it's important because it has derivatives, and Morgan Stanley has all the interest rate derivatives. The problem is these derivatives are far bigger than their capital bases. Yeah. I mean, forget the fact that they're whether they're underwater or not, which they obviously are. The fact is, if you look at, for instance, Goldman Sachs, you look at their balance sheet compared to the amount of derivatives, and it's comical. It makes JP Morgan look like a conservative firm. They are just not big enough. And that's why the government, as you said, behind the curtain, is going to have to try to hide these things by merging them, making them so big that there's really only going to be one left. And it'll be, the United States Bank of JP Morgan. That's what's going to happen.
Yeah, there'll be like one bank, and they'll have branches all over the place. And this is, I don't want to get into conspiracy theories, but the reason why the Fed was created, it's a banking cartel, and its purpose was to eventually drive out all the competition for the big banks. So you'd have like 5 banks in the country, and they would divvy up the pie. And it's classic government picking winners and losers. And as a result, the system loses, we all lose, and doesn't matter what happens in this election. I mean, I like to watch elections because to me, it's like a sporting event. It's kind of extreme fighting with rhetoric and words, but nobody really gets hurt except the populace, the American people.
Yeah, and in this case, I mean, first of all, it's going to be, in my view, it's going to be moot by November because so much will have gone down.
Yeah.
But you don't even have, I mean, you think about the last election, the genuine hatred and dichotomy of Obama and McCain, at least, whether at least outwardly presenting opposing views, there is nothing right now. I don't think Obama and Romney are really even trying to position themselves as any different than each other than, hey, vote for me, I'm not the other guy.
Yeah. I should say it's not really extreme fighting. It's more like wrestling that's taken place. It's a totally fake put up thing, but you like to watch it because, you get attachments to the players. Like you like Hulk Hogan and you hate this other guy because he wears a black cape or a black hat or a mask or whatever. But in reality, they're all employees of WWE and they're all cashing in on it. So it really doesn't matter which guy wins because the outcome's been predetermined anyway.
And the fact is, if McCain won, we'd be the same position we're in today. He may have done, probably he would not have done Obamacare, but he probably would have bombed some more people, and we'd be in the same position. And 4 years from now, whoever's going to be there will have done, probably the same things in the same situation. So it really doesn't matter.
Yeah, well, it's nice to be cynical about the U.S. Political and economic system, but really, it's the only way to really look at it, because in terms of society banding together to govern itself and to set values and to solve problems, we're way past that. This is just this is just like a toll booth. The government's one massive toll booth, and if you want this or that, if you want to go here or do that, you pay the toll, or either you can't do it, or they'll throw you away in jail. They'll lock you up and toss the key, and that's really where we're heading. But anyways, so what are you thinking for this week in the metals? It's going to be pandemonium and chaos in these markets, huh?
Well, Wednesday you have an ECB meeting. Okay. Do not be surprised if they announce something draconian, even if it's just taking the interest rate from 1% to 0.5%, which is, of course, a draconian thing to do because it's emitting desperation. But more importantly, on Thursday, Lucky Ben Bernanke gets to talk before a full session of Congress about the economic outlook. And you could bet that he's going to have to say something material. There is, and again, you saw today's factory orders report. Another absolute. We're talking about the last 10 or 20 reports have been beyond nightmarish. So he's going to be forced to talk about QE. And unless he's absolutely nuts, and unless he's dying for the market to crash on Thursday afternoon, he is going to have to say, yeah, we're really considering doing it at our June 20th meeting, which is only 2.5 weeks from now. So that's what I expect this week. But it's funny, we're sitting there talking about the U.S., which, yes, ultimately the U.S. is the top of the totem pole. It's going to go. But, people have to appreciate what's going on in Europe right now. We are talking about their stock markets. Many of them are below the lows from late 2008. Picture what it would be like in the United States today if bank stocks were lower than they are and the Dow was 6,000 and we were reporting huge recessionary GDP numbers. Okay, which we will be soon. That's how things are. In fact, the Spanish prime minister is a joke of a man. He made a speech this weekend where he had to go on national television on a Saturday and say, we are not at the eve of the apocalypse. That's how desperate it is in Europe. And there is nothing that could stop that freight train from crashing now, not later, right now.
Yeah, and that's why all the big money seeking safety, and like if you've got $10 billion, you can't go to Miles Franklin as much as you would like and go put it all into gold and silver. You got to put it into something, and the least swarmy, least unstable asset is where it's going, into this treasury stuff. Because where else are you going to put it? I guess you could buy stocks of companies that really have stuff, but there's not much choice, is there?
Well, remember, with treasuries, as far as new issuance, it's 60+% is bought by the government, and it's 80+% of long-term bonds. So anything over 10 years they're buying 80% of it. Right. And because of all these interest rate derivatives, which I believe is what caused JP Morgan's big losses a few weeks back, they are buying in the market every day. There's really no way of knowing if there's really a buying surge by the public of treasury bonds at 1.5% yields, or if it's the government. Mm-hmm. And the thing is, you can buy $10 million of gold. You can today. I bet you won't be able to do it a few months from now, because in fact we had one of our busiest days in history on Friday. So things can change very quickly, and I expect that in the next few months, what you saw last week is going to become the norm. And when that happens, you'll get back to shortages in a hurry. We had it last year in April. We had it last year in September, December. It can happen in a blink, and it will.
If you've got a second, I just want to read you an email that I got, if I can find it, from one of our listeners, because, I never try to predict the the top or the bottom because I know I don't know what I'm doing. Let me see if I can find it on my phone. But this guy was really upset with me for some reason. Let me find it. I gotta find this thing. It was pretty funny because I wrote him back. I always write back. If you ever want to talk to me, ever get a hold or have a question for Andy, just write me. Yeah, he's from the Netherlands, so the English isn't great. But let me find what he wrote. Of course,
Take your time.
See it. He said, Mr. Lutz, I think gold will first go down. You and your friends make wrong call many times. I believe gold will go over 2,000 an ounce, but not at this moment. And he signs a GR. So then I said to him, like, I don't make calls. I just observe because I know that I'm wrong and I'm in it for the long haul. So I'm not really interested in the, I said, I really don't care that much about the day-to-day price, only as people want to know about it. So I said, the smart money is buying gold right now. Your Soros's, Hank Paulson, and I think even Jim Rogers started buying it. And, he came.
No, Jim Rogers says he wants to short it now.
Oh,
well, he said, no, I've sold it. I'm selling it and I'm going to think about shorting it. He said that, of course, right before Friday when it took off.
Yeah.
I've written about him many times. I honestly have almost no respect for him. He's a complete Wall Street guy. Yeah, he's a smart hedge fund manager, but he has been poo-pooing gold for the past 10 years. Once in a while, he says, yeah, I'm in it. And then next minute he sells it. He's just a typical Wall Street guy. And, I have no interest in him. That's all.
All right. Hey, anyway, always a pleasure. MilesFranklin.com. We will talk to you next week. And this week, going to be a lot of fireworks, guaranteed.
Absolutely.
All right. You be well.
You too.